Europe's housing crisis puts capital markets at the center. Europe's housing shortage is no longer just a social policy issue. It is becoming a capital allocation problem, and investors are increasingly part of the solution. House prices across the EU have risen sharply since 2015, with some member states recording increases approaching 60%, according to Eurostat data. Speaking at the EPRA-hosted discussion, MEP Borja Jimenez Larraz said Europe faces an estimated shortfall of around 4 million homes and described housing as one of the continent's most pressing crises. Germany illustrates the scale. Germany has struggled to meet annual construction targets in recent years, with economists estimating that hundreds of thousands of additional units are needed to close the supply gap, with supply falling further behind demand. Renovation rates also lag climate targets, with annual investment needs estimated in excess of $200 billion equivalent to meet carbon neutrality goals. Public funding cannot close that gap alone. Why financing structure matters. The European Commission's Affordable Housing Initiative signals intent, but delivery depends on capital market participation. Europe remains heavily reliant on bank lending for housing finance, limiting cross-border investment flexibility. Analysts at Bruegel noted during the discussion that financing challenges differ depending on whether policymakers are addressing affordable housing specifically or broader housing market growth. But in both cases, sustained capital flows are essential. The European Public Real Estate Association, EPRA, has issued 18 policy recommendations aimed at improving coordination between EU institutions and national authorities, particularly around sustainability regulation and investment frameworks. The goal: reduce uncertainty that discourages institutional capital. Energy efficiency as a cost lever. Buildings account for nearly 40% of Europe's energy consumption. Efficiency upgrades are not just climate policy, they are affordability strategy. Speaking during the EPRA-hosted discussion, Serge Fautré, CEO of AG Real Estate, said private capital can play a decisive role in expanding housing supply if supported by clear and predictable regulatory frameworks. AG Real Estate manages a portfolio valued at approximately $6.9 billion and has advanced residential and public-private partnership projects in Brussels and Flanders. Lower operating costs from energy-efficient housing directly affect long-term affordability for tenants, particularly in an environment of energy price volatility. Cities face immediate pressure. At the municipal level, urgency is acute. Speaking at the EPRA-hosted discussion, Thomas Limes of Eurocities said that when member cities were asked about affordability, only 14% reported that housing remains affordable in their jurisdiction. Cities are experimenting with municipal bonds and partnership models, but supply bottlenecks and financing constraints persist. Short-term rentals and planning delays add complexity. A capital signal, not just a policy debate. The housing crisis is increasingly intersecting with investor confidence. Regulatory clarity, predictable sustainability rules, and coordinated EU-level frameworks function as signals to private capital. Without alignment, risk premiums rise. With it, institutional investment can scale construction and retrofits. Europe's housing challenge is therefore less about whether capital exists and more about whether policy coherence can mobilize it fast enough. You've been listening to Sustainability Soundbites by Environment and Energy Leader. For partnership opportunities, please reach out to our team.